Oil prices on the rise again. Shortage fears and uncertain geopolitics continue to rattle markets. Crude has soared more than 15% in the past 3 months. Prices now up 20% this year. According to our next guest, prices could 15% in the past 3 months. Prices now up 20% this year. According to our next guest, prices could push even higher later this summer. Dan Eberhart is CEO of Canary LLC, one of the largest privately owned oil field services companies in the United States. He joins us from Oklahoma City. Welcome, Dan, to Power Lunch. Great to have you with us.
Thank you for having me.
What's the catalyst that takes us even higher from here? I mean, isn't there a natural cap on prices because producers here in the United States will start pumping more?
Well, I think that's partially true, but I think that there's supply constraints with the takeaway capacity or pipeline capacity in the Permian. And I think as you're seeing the spread widen between Brent and WTI, I think there's plenty of room to roam before we hit that natural cap.
So the problem is not that they can't produce more; it's that the infrastructure can't carry it.
Well, I think that's why you're seeing the analysts think that the exports are going to be capped somewhere around 3 million barrels a day, and are not going to be able to get much higher than that without more takeaway capacity and more export capacity at the terminals.
I think this is an interesting point that you're making, Dan, because this is also potentially a headwind or an issue for if China actually increases imports of oil from the United States. There's only so much that you can do because the infrastructure isn't quite up to par yet.
Well, I think the infrastructure is not up to par, but I also think that there's been a capital spending deficit the last 3 years. There was something like $800 billion worldwide in capital projects in the oil and gas industry taken off the production line during the oil bust 2015 to first half of 2017. And I think that that's going to lead to kind of the end of lower for longer and that mantra and the beginning of soaring sooner for oil prices.
So what happens to global production if prices go to where you think they are?
Well, I think it's the other way around. I think it's global production is going to be capped out, and that's what's going to lead to prices soaring sooner. You know, we've got falling production
in Angola. It's going to be capped out. Why? Because they're going to hold to their production quotas, or what?
No, I think the quotas are a little bit less relevant right now. I think you've got Saudi Arabia wants oil price to be higher for an Aramco IPO or partial IPO, and I think that production is falling in Angola, production is falling in Algeria, and then there's basically a catastrophe we're on the precipice of in Venezuela. You know, production in Venezuela in 2016 was 2.2 million barrels a day. Right now it's 1.4 million barrels a day and falling 100,000 a month. And I think we're on the verge of falling off a cliff with the Venezuelan production. If the U.S. enacts sanctions, or there's some kind of regime change, or the production falls anyway, or because of that, the rally is going to pick up steam and it's going to increase even faster.
So we were just putting up your predictions, Dan, and they're pretty shocking. $120 a barrel by August, and that I presume is on Brent.
Yeah, that's on Brent, but I think if we hit, which right now is around 80, right? But I think if we hit several of these tripstones with Venezuela and Venezuela production falling off a cliff, and Angolan and Algerian production falling, and bottlenecks in the U.S., coupled with synchronized world growth, I think it's a distinct possibility.